Hey there, ever wondered how businesses keep track of all the money coming in and going out? Well, it all comes down to something called the basis of accounting. I know it sounds a bit technical, but trust me, it's super important. And actually pretty simple once you break it down. So why do businesses even need accounting methods? Imagine running a lemonade stand. You've got money from sales, cash spent on lemons and sugar, maybe even a few IOUs. Without a system, it's chaos. That's where accounting methods come in. They help you track income and expenses, so you always know where you stand. Now, there are two main ways to do this: cash basis and accrual basis. Let's start with the cash basis of accounting. Cash basis is just what it sounds like. You record revenue when you actually get the cash, and you record expenses when you pay the cash. Simple, right? Let's say you run a small bakery. If a customer buys a cake and pays you on the spot, you record that as revenue right then. But if someone orders a cake and promises to pay next week, you don't count that money until it actually hits your hand. Same goes for expenses. You only record them when you actually pay the bill. The cash basis is easy to use and great for small businesses or freelancers who just want to keep things simple. But here's the catch. It doesn't always give you the full picture. If you've done a bunch of work but haven't been paid yet, your books might make it look like you made no money at all. That brings me to the accrual basis of accounting. This method is a bit more complex, but it paints a much clearer picture of your business. With accrual accounting, you record revenue when it's earned, even if you haven't been paid yet. And you record expenses when you incur them, not just when you pay. Let's go back to that bakery example. If you bake a cake and send an invoice to your customer, you record the revenue when you send the invoice, not when the cash arrives. If you buy supplies on credit, you record the expense right away, even if you'll pay the bill later. Accrual accounting gives you a more accurate view of how your business is really doing, especially over time. That's why it's required for larger companies and businesses with more complex finances. But it does mean you'll need to pay closer attention and maybe use accounting software to keep things straight. So, to sum up, cash basis is simple and tracks actual cash flow, but can miss the bigger picture. Accrual basis is more accurate and required for bigger businesses, but a bit more complicated. Understanding the basis of accounting helps you make better financial decisions and stay on top of accounting standards. Whether you're running a lemonade stand or a big company, knowing how to track your money is key. Thanks for watching. And remember, a little accounting know-how goes a long way.